And in gold, we're having an absolutely spectacular run. Equities are really going crazy. And I think what's happening is that all three big funds, Vanguard, State Street, BlackRock, have all decided that the interest rate cuts that are coming are going to be prolonged and ongoing due to the slowing US economy. Hence all this seemingly mindless euphoria about very flat US economic data. I mean, retail sales were totally flat and everyone finds a component to put a positive spin on it. But you can find negative components, put a negative spin on it as well. But overall, it was flat. I think the Fed will cut once this year, maximum of twice this year. But if inflation pressures remain high, and there's a lot of information to suggest that they will, the Fed may not ever do any more than that into next year, well into next year. But it doesn't really matter what the fundamentals are doing because these three funds now command something like 88% of the S&P 500 market. So whatever they decide is what the market will do. And what's happened over the last week is they've decided to move into the broader market again after the Russell 2000 had been heavy to sideways for a couple of years. They saw value there in a lower interest rate environment, which sounds all academically okay, except that in the real world, the actual economy is going to be slowing such that these companies may not be making more money. They may be making less money in the future. But the world still appears split in two between the haves and the have-nots. I mean, the haves are doing extremely well, wealth gap is growing, and the market seems to be mostly about what's happening to the haves. Let's forget 80-90% of the population, the have-nots. By the way, just so you know, average income in the United States is around $65,000 US. But if you take out the top 10%, the average income in the United States is only $35,000 US. So the have-nots in these higher price environments are doing bad. And I see that will eventually feed through to their demand for general products and services, which will pull down some of those Russell 2000 earnings expectations. Nevertheless, the big three think it's all about interest rates at the moment in this binary world we now live in. That's, I think, a bit of a product of the current generation of fund managers having grown up, or the younger generation, middle generation, having grown up on gaming, which is a binary exercise. So they're always looking for the simplistic binary response. Fed will cut rates, so we buy stocks. But the thinking behind that is influencing so much money that it doesn't matter that it may not make sense in the long term. For the moment, it means stocks can run away. In fact, the US 500 index, if it makes a new high again today, could actually sharply accelerate. So keep an eye on all of that, and I'm still long gold and suggest you are too.